Hello and welcome back to another episode of Market Brief After Hours. It is great to have you with us as we break down the midweek market action. And what a session it was. If Monday and Tuesday were about finding footing, Wednesday was about planting the flag and charging forward. The hesitation seems to have evaporated, and the bulls are back in control.
They certainly are. It feels like the market took a deep breath, looked around, and decided that the AI story isn't quite over yet. We saw a definitive return to risk-on sentiment. The anxiety that triggered last week's sell-off, specifically those fears that the AI bubble was bursting, has really calmed down. Investors are looking at the fundamentals again, and they like what they see in large-cap tech.
Let's get right into the numbers, because the scoreboard really tells the story today. We saw green across the board in the U.S.
Absolutely. Leading the pack, as is often the case lately, was the Nasdaq Composite. It surged about 1.26%. Closing at 23,152. That outperformance was driven almost entirely by that relief rally in software and AI names we just mentioned. Then you have the S&P 500, which climbed 0.81% to finish at 6,946. And finally, the Dow Jones Industrial Average, the blue chip index, advanced 0.63% to settle at 49,482.
Those are solid gains. And you mentioned the Nasdaq leading the way. It seems like Nvidia is once again the heavy lifter here.
It is impossible to ignore them. Nvidia's continued rally is really the psychological anchor for this market right now. When Nvidia is strong, it steadies the sentiment for the entire tech sector. But it wasn't just hardware this time. We saw renewed interest in software names, which reinforced the view that the recent selling was perhaps a bit overdone. Plus, you had news about Anthropic's new AI tool integrations, which just adds fuel to the fire that innovation is speeding up, not slowing down.
It's interesting because all of this is happening against a backdrop of some pretty heavy headlines. We have tariffs, we have tensions in the Middle East, and yet the market seems to be shrugging it off.
That is the key takeaways here: resilience. The political and geopolitical headlines are there, they are in the background, but they aren't derailing the recovery. Investors are watching the tariff situation, but the implementation looks more moderate than feared. And regarding the Middle East, while tensions are high, they haven't spiked enough to spook the broader equity markets yet. It's a signal that investors are willing to selectively re-engage rather than retreat to cash.
Speaking of tariffs and global trade, let's look outside the U.S. How did European markets handle the news?
Europe actually breathed a sigh of relief. The big news was the implementation of a 10% universal U.S. tariff. Now, nobody likes tariffs, but the market had priced in a threat of 15%, so getting 10% actually felt like a win. The Pan-European Stock 600 climbed 0.7%. In London, the FTSE 100 had a very strong day, gaining 1.09% to close at 10,797.
So bad news that wasn't as bad as expected became good news?
Exactly. And on the economic front, there was a bright spot, with Eurozone inflation falling to a 16-month low of 1.7% in January. That helps with the cost of living narrative. However, it wasn't all sunshine. German consumer sentiment took a surprise dive for March, and corporate performance was mixed. You had Diageo tumbling nearly 13% after cutting sales forecasts, and Aston Martin announcing job cuts due to those trade duties. So the macro picture in Europe is still a bit cloudy, even if the indices were up.
Now, heading over to Asia, the mood seemed even more euphoric than in the U.S.
It was historic. We saw all-time highs being smashed. Japan's Nikkei 225 surged over 2% to a record 58,583. South Korea's Kospi breached the 6,000-point milestone for the first time ever, closing at 6,084.
That is incredible momentum for the Kospi.
It is, and it's the same story as the U.S., semiconductors. Heavyweights like SK Hynix and Samsung Electronics rallied hard. They are the backbone of that index, and they are benefiting directly from that shift in sentiment toward AI. Taiwan's benchmark also hit a record high for the 5th day in a row. Even Australia joined in, with the ASX 200 rising 1.17% to 9,128, despite their inflation data coming in a little hotter than expected.
It really does seem like a synchronized global tech rally. We are going to take a very short break, but when we come back, we are going to dive deep into the currency markets. There are some very specific technical levels you need to know about, and we will look at the individual stocks that made massive moves today. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the equity rally. Now let's shift gears to the currency markets. There was a lot of technical action in Forex today. Let's start with the euro against the dollar.
The Euro-USD pair is looking quite constructive. It rose 0.28% to close at 1.1805. What is crucial here is where it is sitting relative to its moving averages. The pair is comfortably above the 50-day simple moving average, SMA, which is at 1.1774. It is also well above the 100-day SMA at 1.1690 and the 200-day SMA at 1.1656.
So technically, the bias remains to the upside.
Yes, it is recovering toward the upper boundary of its recent consolidation range. Resistance is right overhead at 1.1814, and if it clears that, we are looking at the psychological 1.1900 level. As long as it holds above that 50-day average of 1.1774, the bulls are in charge.
What about the British pound? Sterling had a decent day as well.
It did. GBP USD advanced 0.46% to close at 1.3552. This was a significant rebound because it pushed the pair back above its 50-day SMA, which sits at 1.3535. The 100-day SMA is down at 1.3394, and the 200-day is at 1.3446. Both of those longer-term averages are sloping higher beneath the price, which confirms the uptrend. We are looking at immediate resistance at 1.3556.
And the Aussie dollar? That usually acts as a proxy for risk sentiment.
And it acted the part today. AUD-USD surged 0.88% to close at 0.7120. This was a breakout from a short-term consolidation. It is trading well above all key averages. The 50-day is at 0.6858, the 100-day at 0.6697, and the 200-day at 0.6611. Closing near the session high suggests the momentum is real.
Finally, on the Forex front, the yen. We've seen some volatility there recently.
USD-JPY reclaimed its bullish trajectory, rising 0.35% to close at 156.44. Buyers stepped in after a dip. The support levels are very clear here. The 50-day SMA is at 155.95, and the 100-day is at 155.05. As long as we stay above those, the broader bullish trend is dominant. The next target is the recent swing high of 156.82.
Let's touch quickly on commodities and bonds before we get to the single stock movers. Oil was a bit of a mixed bag today.
It was a tug of war. On one side, you have supply risks with U.S.-Iran tensions. On the other side, you had a massive inventory build in the U.S. Crude inventories rose by 16 million barrels last week. Expectations were only for 1.5 million. That is a huge discrepancy.
That is a massive build.
It is. It limited the upside significantly. Brent settled up just a fraction at $70.95, and WTI ended at $65.49. Meanwhile, in precious metals, gold is consolidating, closing at $5,150. It's holding well above its 50-day SMA of $4,738. But silver was the outperformer, climbing 1.48% to $88.37. It's staging a sharp recovery and remains firmly above its 50-day average of $82.28.
And briefly on treasuries, we had the State of the Union address from President Trump.
Yields drifted higher as investors digested the speech and some fresh supply. The 10-year yield rose to 4.05%. We also saw a 5-year note auction that drew very low demand, the weakest bid-to-cover ratio since July. That lack of demand added some upward pressure on yields.
All right, let's get to the market movers. These are the individual stocks that made headlines today. Some huge winners and some painful losers. Let's start with crypto.
Coinbase was a standout. Shares jumped 12%. They launched stock trading on their platform, which is a major strategic pivot. They are trying to position themselves not just as a crypto exchange, but as a multi-asset venue where you can trade stocks, ETFs, and prediction markets. The market clearly likes the diversification strategy.
Another big winner was Clear Secure. I see their kiosks at the airport all the time.
And business is booming. The stock soared 39%. They beat expectations on everything. Earnings per share, revenue, EBITDA, plus their guidance for the first quarter was very strong. It seems the demand for biometric identity solutions is accelerating.
And then there is Kava Group, the fast casual Mediterranean chain.
They rallied more than 26%. They forecast full-year comparable restaurant sales growth of 3% to 5%. The consensus was only 2.75%. In a time when consumers are supposedly pulling back on spending, Kava is showing they still have pricing power and foot traffic.
And GoDaddy also took a hit?
Yes, down 14%. Their revenue forecast came in below estimates, but the interesting part was the reason. They cited slower AI-related adoption. In a market that is rallying on AI optimism, hearing a company say AI adoption is slowing for their specific customer base was not what investors wanted to hear.
That is a crucial distinction. It seems the market is shifting from buy everything AI to buy the companies that are actually winning with AI.
Precisely. The rally we saw today reinforces that shift away from blanket caution and towards selective conviction. Investors are willing to look past the near-term noise, the politics, the tariffs, to focus on companies positioned well in this evolving landscape.
A fascinating day and a lot to digest. That wraps up our coverage for this session. Thank you for tuning in. If you find this useful, please follow Market Brief After Hours so you never miss an update. We will catch you next time.